Hello, everyone, and thank you for joining us, and welcome to the 8th Great Britain-Cyprus Business Association webinar titled Is London Still the World's Global Financial Center, and is Cyprus an alternative destination for Londoners? Stay tuned as firms from the UK and Cyprus will give us an update. My name is Xenia Neofidou, and I'm the Managing Director at CX Financia. I will be the moderator for the day. Today, I have with me an exciting panel, thought leaders in UK and Cyprus, who will be sharing with us about the strengths and challenges in areas post-Brexit. Our esteemed guests for today are Stephen Coleclough, Principal at Caesium International London, UK, Alessia Paoletto, Private Client Tax Lawyer at Withersworldwide. Also from Withersworldwide is Eleni Polycarpou, Partner, Co-Head of International Arbitration, and Maria Georgiou, Chief Financial Officer at Michael Kyprianou Accounting. Mr. Savvas Kyriakides, the founder of Great Britain-Cyprus Association, is also here with us and will speak to everyone in a few minutes. He had an issue with the camera. If not with the camera, he will speak to everyone in a while. Before getting started on the introductions, I would like to get some administrative issues out of the way. At the end of the presentations, we have allowed for ample time for the Q&A answers, so we urge our audience to type their questions in the chat and the Q&A control panel. Our speakers will try to answer them all at the end of the speaker presentations. The speaker presentations are available on demand. Please send us an email and we will arrange to send them to you. We will be recording this webinar. We will have the video recording available within the next few days on the Great Britain-Cyprus Association website for those interested. I will now invite Mr. Savvas Kyriakides, the founder of Great Britain-Cyprus Association, to say a few words. Savvas, you can start your presentation. I hope you're still not on camera, but we are waiting for you to say a few words.
Yeah, thank you, Xenia. I would like to welcome all the speakers first. Stephen Coleclough, Alessia Paoletto, Eleni Polycarpou, Maria Georgiou, and you, Xenia, in this 8th international webinar organized by Great Britain Cyprus Business Association. This is going to be the last webinar before the summer holidays, and I am quite happy with the results of this 7 and now the 8th international webinar. We covered a lot of very interesting topics that both business people and professionals from the UK and Cyprus have attended, and they expressed their happiness of the results of these webinars. Now I'm getting ready for the after-COVID era, hopefully, and we are gonna, we believe we are gonna be ready to organize some live events, international events in London, and later on in Cyprus. As most of you know that we are organizing this event since 2017 in London, and many distinguished speakers from Cyprus are coming all the way to London to promote Cyprus as a perfect place to live, to relocate, or to retire, or even to invest. So hopefully we're going to be there soon at the same venue, or definitely at the same city, London, to gather all together, to have networking, and of course to get very useful information about Cyprus and London. And this time we're going to be glad to invite some businesses from London as well, who want to promote their businesses for the local people, but also for the businesses operating in Cyprus. Thank you once again, and I would like to thank our sponsors as well, for supporting this event, and of course our attendees that will be with us for the next 1.5 or 2 hours, depending on the presentation and the questions. Thank you, and now it's up to you, Xenia, once again. Thank you.
Thank you so much, Savvas. Indeed, it has been a very interesting season. The webinars were really interesting, and really looking forward, as you said, to the real live events. Okay, wish all the best for the new season. Without delay, I will start with our first speaker, Mr. Stephen Coleclough. Mr. Stephen is the owner and principal international tax advisor, Caesium International LLP UK. He's a leading international tax advisor who specializes in the real estate, financial, and online sector, and is a global expert in dealing with tax matters pertaining to ultra-high net worth individuals. Previously a lawyer, Stephen boasts over 30 years industry experience, including roles as an expert witness and other prominent international positions. Combining strong technical expertise with an ability to communicate complex ideas in simple terms, Stephen is adept at tackling multifaceted problems while avoiding litigation and disputes. Mr. Stephen will take us back in time and talk about inbound to the UK in 2011 compared to post-Brexit 2021 and what is coming into 2022. I'm really curious to know, aren't you? So let's welcome our first speaker, Mr. Stephen Coleclough. Stephen, you can unmute yourself and start your presentation.
That's better. Thank you very much, Xenia. Now, the next challenge is getting my slides ready or up so that you can see them. Right. Good afternoon, everyone. Like Xenia said, I'm London-based and worked basically in UK taxes for a while. Thought I'd just do something a little different and talk about loads of different stars. So let's just start off. Let's go back to 2011. The reason I go back to 2011 is because that was the year before the US introduced FATCA, which basically led on to a whole load of things you can see on this slide, which we'll talk about in a minute. But in 2011, the only things that really concerned Cypriot businesses or Cypriot advisors looking at the UK were those things that are coloured in teal and not in blue. And for anybody who's slightly colourblind, my apologies. Interestingly, for example, on the top left of your screen, you'll see I put 0% REIT. The United Kingdom has a real estate investment trust regime, and Cyprus was the only treaty we had that gave a 0% withholding tax on dividends out of the UK. Now, we haven't had a dividend withholding tax since about 1973, generally, but the REIT system introduced one, and a lot of large firms and advisors were pushing clients to use Luxembourg to reduce the withholding tax from 20% down to 15%. We, on the other hand, were putting people into Cyprus because it got down to 0%, and we did get back from the HMRC the full 20%. Apart from that, the only other major issue was just the standard issues you'd expect. If you carry on business or buy land in a country, you will pay death duties, capital gains tax, stamp duty, land tax, or whatever. Zip forward to 2021. And as you can see, there's a lot more teal and a lot less blue. Just looking at the blue, probably the most important issue post-Brexit is that large star on your top right, which is the lack of freedom of movement of goods. For VAT and customs purposes, the United Kingdom is now the same as the United States, the same as anywhere else outside the European Union. We have tariffs coming in, tariffs going out, and we have our own VAT regime, which is very closely modelled, of course, on the old European Union one, but we have already started to tinker with it to give ourselves a different change. I mentioned FATCA, and you'll see in the middle there a block of 6 teal-coloured stars. The United States started off with disclosure of tax avoidance schemes, and that came in to the EU with the Anti-Tax Avoidance Directive, known as ATAD, in 2018. But the US had it first. UK adopted it in 2003, and that led to a lot of activity, of course, in both the US and the UK. It is now in its latest emanation in DAC 6. You'll see there I put DAC 6 Lite because the UK has already decided, together I think with Gibraltar, only to apply that part of DAC 6 which relates to the avoidance of reporting under AEOI, Automatic Exchange of Information. And one of the key issues about that is that there are certain significant countries that will not abide by AEOI, the main one being the United States of America, another large one being Kazakhstan. So any business that moves from either the UK or the EU and moves to the USA automatically has a DAC 6 reporting issue in respect of that move. We are, of course, up to speed with the AEOI, Common Reporting System. We also are pressing ahead with TRS, Trust Registration System. Again, that is EU driven, but we will, as you will see on the next slide, be taking that further. And then in addition, we've got the PSC, which is the Persons with Significant Control of Companies Register. That is a public register of Companies House, which you can all see. Going back to the left-hand side, you can see now under the treaty, or rather post-Brexit, we don't have access to the Royalties and Interest Directive. We don't have access to the Parent Subsidiary Directive either. So if you were relying on those for a structure involving the UK, you really should have revisited by now that position. But instead, we do have a relatively new treaty with Cyprus, 2018. Unfortunately, the dividend withholding tax now is the same as everybody else's, 15%, same as Luxembourg, same as the Isle of Man, same as all our other treaties. But we do have, of course, withholding tax provisions. And one of the most important things which is often overlooked is that the treaty has a non-discrimination article. Now that's important because that feeds into a lot of UK legislation, particularly for small and medium-sized enterprises. So there are a lot of provisions in the UK tax regime that do not apply if you are from a country like Cyprus with a double tax treaty which has a non-disclosure article in it. Coming right up to date, of course, now and since 2017, we have inheritance tax on UK residential property, regardless of where you are domiciled. Now that applies to individuals if they die owning anything which has value related to UK real estate or residential real estate. So it's the value that's important, not how it's necessarily owned. And if you're a non-UK resident trust and some of your trust value is derived from UK residential property, then you too will have a 10-year charge. We charge those trusts every 10 years. On their 10th anniversary, you'll have a charge to inheritance tax. Basically, what we've done is we're trying to get back to where everybody else in the OECD is. And another part of that is the capital gains tax changes. If, regardless of whether you are UK resident or not, you now have capital gains tax on the disposal of any land and also on UK property-rich companies. Her Majesty's Revenue and Customs expect you to be able to fill in your returns for these properties, and we have a very interesting case where a lady in Australia made a loss on the sale of a property, didn't file a return, got a £100 penalty, and the judge dismissed it, suggesting that perhaps the people in New South Wales are more keen on what the Australian finance minister was saying rather than the UK one. We also have ATED, the bottom left of your screen. ATED means annual tax on envelope dwellings. Basically, there's been a large push in the UK to make sure that people have one residential property to live in, and that's it. And they've been punishing through various systems the buy-to-lets and people owning properties as second properties. ATED was attacking those in a corporate entity and imposes an annual tax which will go up every year with inflation for having a property in an envelope like a company or a partnership entirely owned by companies, and you pay that tax from £7,500 a year upwards, year on year. Now, a lot of people want to take those properties out of that regime, but the main obstacle to that is the inherent capital gain in the property in the entity concerned. There are ways around that. They're not straightforward, but if you can basically get a tax-free step up in base cost, it's then quite easy to de-envelope that property. And finally, as a new thing for 2021, if you are non-UK resident and you buy a property in the UK, you have to pay an extra 2% stamp duty, or stamp duty land tax. Of course, the definition of a non-UK resident person is completely different from all the other tests that we have for non-UK residents, because we have to keep tax advisors in business. So what's coming up for 2022? Well, really a TRS for all trusts. That is being expanded and rolled out to all express trusts, and there are a lot of exceptions to statutory trusts, charity trusts, etc. But the UK will be going a little bit further and say anyone who has a trust which owns land in the UK directly, i.e. not through a subsidiary, then we want that to register too. The only trusts I know like that are what we call dry trusts, which have been used for tax planning purposes, and for that we are considering the position going forward. We're also proposing a register combined between the Land Registry and Companies House, which will disclose the ultimate beneficial owner of all UK land. That is being brought in because apparently a lot of money has been laundered through UK real estate, and now everybody's laundered their money. We're going to introduce this to find out who they are. The other final thing that we've announced is we're going to have some free ports. One of the big things with the current government is to try and eliminate the north-south divide in the UK, i.e. the north is nowhere near as wealthy as the southeast, basically. That has been government policy for a very long time, but this government seems determined to actually do something about it. So they're moving government departments out of London, and in addition, they're creating these free ports, which, if you think about it, given that we're no longer in the free movement of goods regime, offers opportunities both for people coming into the UK with goods and people going out, but also the 100% tax allowance of the cost of a building in these places, coupled with zero stamp duty land tax, makes it an exciting investment opportunity. What I expect is that fund managers and banks will start buying these properties up and offering fund investments so that people can basically invest in UK commercial real estate tax-free. So that's a quick canter through what we have. There's my disclaimer. You can read it at your leisure. You might find it slightly amusing, then again, maybe not. And that's all I have to say. Thank you very much. Any questions?
Yes, I have a small issue with the internet myself, so you will not be able to see me, but I'm trying to sort it out. So I'll introduce our next speaker. So we keep moving on, is Mrs. Alessia Paoletto, private client tax lawyer at Withers International, and partner in the private and tax team. Alessia is dual qualified English solicitor and Italian lawyer. She advises on a range of wealth planning matters affecting high net worth individuals, entrepreneurs and their families in respect of international estate planning, trust and tax matters, as well as cross-border inheritance disputes, with an emphasis on the complex interaction between the English conflict of law system and the continental rules. She also advises individuals moving to Italy, and she is able to provide a wide range of Italian law advice, including pre-immigration, real estate, and estate and succession planning. Thanks to her practice spanning across different jurisdictions, Alessia has developed particular expertise in analyzing double tax treaties, both in the context of income and capital gains tax, but also in relation to inheritance tax. She's a native Italian speaker and is fluent in French, which is very helpful when explaining complex concepts to foreign clients or when dealing with foreign families, councils, and notaries. Alessia, in her presentation today, will talk about the implications of relocation to the UK. Alessia, the floor is yours.
Thank you very much. Thank you for the presentation, and I will say thank you to Stephen as well, because he has made my job very easy, much easier, because part of what I'm going to touch in the next 10 minutes builds on tax aspects. I'm not going to talk only about tax, but I am going to touch on tax. So what I thought I would do is that I'm going to try and share my screen, and I hope you can see my slide over there. And this is a slide that I often use when talking about relocation in general. And it's a slide that really doesn't have to, a slide and a process that doesn't have to be used only for relocating from country specific A to country specific B, is a set of mental notes that one needs to have when relocating. And in this context, we are going to talk about moving to the UK, and I'm going to look at it moving specifically from Cyprus, but really can be from anywhere. And Stephen has mentioned some of the tax implications, and I will touch on some of those. But really, when advisors like us speak with clients or intermediaries about an individual or a family wanting to relocate, or a business wanting to relocate, there is always one driver in my experience, one reason for the relocation, and that could be business, that could be family choices, schooling of the children, that can of course be tax, and especially in the last few years, the shopping for favorable or less cumbersome tax regime has been a choice of many in terms of where should I go next. So approaching the relocation, I think, is something that needs to be looked at as a whole. As I said, there is a driver, there is always a driver, and unfortunately that driver risks being the kind of sole focus, and everything else tends to be forgotten. But if you only look at all of these aspects together, and as I said, I'm hoping do give me one sign if you can't see the slide. But there are various elements that come into the picture. For example, you're coming from a country that now does not benefit anymore from the freedom of movement of individuals. Stephen mentioned freedom of movement of capital. Unfortunately, individuals are stuck with the same lack of freedom now, especially from 1st of January, even more so after the after the 6th month. So from the 1st of July, coming July. So the way you are coming is important. Do you need a visa? How long are you planning to stay? How long is your family member planning to stay if that's a family relocation? Are there any visas offered by the country, and specifically by the UK, that might be helpful to you? So if it's your employer relocating you, hopefully they will sort it out for you and help you to relocate. If you are deciding to move for business purposes, for example, you might want to look into the investor visa that the UK has been offering for a while, and has been obviously more and more taken up by foreign investors. You need to be aware what sort of capital you need. You need to be aware that it doesn't work like in other countries where you can buy a real estate and have a visa and a right of residence. It's more an investment that you need to make in investing products as opposed to land or real estate. And you need to know how to invest, where to invest, and crucially, which products and which intermediaries can give you that certificate that you can then use for the home office. When you buy a property over here, again, you need to know the rules that run around the conveyance. If you are coming from a non-common law jurisdiction, there are major differences. That might not be the case for Cyprus, but if you're an intermediary and your client is relocating from Europe, mainland Europe, they might have confusion when they approach the UK conveyancing system. And as Stephen said, there is an additional layer of tax that the foreign buyer needs to be aware of when they buy not being UK resident. So there is some planning there to be done in terms of when a property might be purchased for planning for relocation of the family. And then there are all aspects, obviously, that surround the tax and the tax implications. And I'm sure that a lot of you will know the UK has really two different tax systems. It's the same tax system, but it offers two options, let's say, to foreign individuals who are relocating. The first one is the, say, ordinary default option, and that would be for individuals who move here and are taxed on their worldwide basis, assets everywhere, income arising everywhere. And that's very similar to a number of other countries. And the other option is what we call the res non dom regime, or the remittance basis regime. It has various definitions, but in very broad terms, what it does, it's segregating, in a sense, the foreign assets and the foreign income, so that is not touched by the UK tax authority and by HMRC, and so that you can, as a foreigner living in this country, you can be taxed only on UK source income and gains. It's not as simple as that. There is a lot of planning that needs to go into planning for an individual relocating and wanting to use this regime. Things that need to happen before relocation, things that are much better if they happen before relocation, so that the individual has capital available to them whilst they live here. And a lot of caveats and safeguards that the individual then needs to be aware of and looking at when is actually over here. So again, if an individual and their family are planning to move, they have to be careful in terms of how they manage their money and their income and gains once they are over here. And ideally would have looked at that before coming. Taxation also looks and impacts things that, and aspects of life that individuals may not have thought about before coming to the UK, perhaps because in their country of residence, or because in their country of residence and country of business, or the country and jurisdictions that they know is a known thing, or it's a standard thing that is managed in a certain way. I'm thinking, for example, of matrimonial property regimes. Matrimonial property regimes a matrimonial property regime is a legal relationship between spouses or between civil partners in those countries who have same-sex partnerships, and it basically relates and governs the relationship between these two people and their assets, both in relation to assets acquired before the marriage and during the marriage. And each single country has different rules when it comes to matrimonial property regime. And so, you know, if people have, if say a couple has not moved from a specific jurisdiction, they would not know that in the neighboring jurisdiction, assets there would be governed in a different way. And they would not know that by simply physically moving over there, and living there as a married couple for quite a while, they may completely change their matrimonial regime. So that comes to a shock when people relocate, and it comes especially as a shock when they get told 6, 7, 10, 20 years after having relocated, because they haven't done any planning or haven't taken this change into account. And that can have significant tax impacts, either in the jurisdiction that you live, in the jurisdiction that you come to, or in the third jurisdiction where, say, you have your investments or your family holiday home or your family company. The UK does not have, the UK and England in specific, but the UK in general, does not have matrimonial regimes as such. They're not known, they don't exist. And matrimonial property is generally dealt with as matrimonial, so as a joint property on divorce. So again, once a couple relocates over here, or say the couple is over here and is planning for their children getting married in cross-jurisdictional marriages, it's fundamental that a thought is given to these aspects as well, so the legal aspects of any relationship, and see whether there's anything that can be done. There's, for example, the option to do prenups and postnups, and see how these may be used in different countries. The same goes for succession. Pretty much the same issues arise when you relocate. You risk changing the rules that apply to your succession, and if you haven't thought about that or planned for that, then not necessarily you, but your estate may be in danger, at least from being sort of cut significantly by the taxman, and also from people not receiving the assets that the individual might have wanted, say within the family members, for example. Again, there are no specific forced heirship rules here in the UK, something that is the norm in continental Europe, and I believe in Cyprus as well. But there are other rules that need to be taken into account. And then, of course, there are the European rules, both in relation to succession and in relation to, say, matrimonial regimes. And it's important to understand how these European rules influence the topic, the matter, the discussion, the assets, and the relationship once you are relocated in the UK, or you have invested in the UK, and in a post-Brexit world. And I think Eleni is going to touch on the nuances of the UK having gone out of Europe and the European rules in a while. In general terms, I think one of the aspects that are fundamental to remember is that, in my mind, relocation really, as I said, it needs to be looked at as a bigger picture proposition and a bigger picture chart, in a sense. So obviously the immediate question will be what you're asked in terms of asset advisors, what we are asked to do, but we cannot avoid discussing and raising points with the clients and with their advisors in terms of what other aspects there are that need to be taken into account. And one of these aspects that is currently under discussion, for example, is in relation to the migration moment. So when, from a tax perspective, you are moving from a country and going to another country, how do you determine that you have actually effectively relocated from country A to country B? I said earlier about the immigration aspects, and those, in a sense, are much more black and white. You have to have a visa, you have to have a stamp somehow on a piece of paper. Is much more black and white now than it was pre-Brexit, where people were free to come and go. Now you're not anymore, and so you will need to make sure that you have all of that in place. But then it's not just that. It is also a case of understanding what will make me as an individual, for example, no longer Cyprus tax resident or civilly resident in Cyprus from a non-tax perspective, and what will make me UK tax resident once I get to the UK. And again, different countries have different rules, and in the UK, you don't have a piece of paper or a register where you kind of go and present yourself and make yourself resident like other countries have. Is a formal sort of approach. Here we have a test that is called the statutory residence test, and it's a series of, say, questions and a series of number and thinking that you need to do in order to determine whether an individual is resident or not. And you look at number of days, like you do in every single country, so check how many days you spend in the country, but you look also at ties, meaning how many links and connections you have with the UK or with the country that you're leaving. And you overlay that with the fact that the UK has a very different tax year to anywhere else in the world. We have a 6th of April to 5th of April the following year for individuals, not for companies, for individuals. And so for an individual who is planning to move, coming from a country which I believe like Cyprus is, you have a tax year for individuals that is the calendar year, then you're leaving, say, at the end of December, you're coming over here, but the tax year here in January has not started yet. It starts in March, well, at the beginning of April, end of March. So you risk having a period of time where potentially you are either not resident anywhere, or you might risk being resident in 2 different countries if your days exceed, because, for example, you've come a little bit earlier in order to settle your child at school, to see that property that you wanted to buy or rent, and your days start piling up in the year. So again, it's fundamental to know what you're doing, or know what your clients are doing if you're an advisor, and know that well in advance. There is a proposition now to, well, it's not so much a proposition, but a movement, let's call it, to align the UK tax year for individuals to everywhere else virtually, so calendar year. But obviously that has a major impact on all of our tax system, so it would be long to go. But as a wrap up, because I think I'm coming up to my 15 minutes, I think the main point is to make sure that you look beyond what is the immediate requirement of a relocating individual, because the impacts, the potential impacts and the outcomes for the years to come of a relocation to the UK or anywhere else, for what matters, are really relevant. And once you've done all of that and you've done your thinking, you will find out that proper planning is key, but also proper planning allows for the relocation to be really successful, both in terms of personal life, but also in terms of your financial assets and the taxation that goes with it. And this is for my 15 minutes time, so I think I'll stop sharing.
Okay, thank you so much, Alessia, for your indeed insightful presentation. Indeed, if anyone is thinking of relocating, better have advice from your lawyer or tax advisor, so to be proactive. If you have any questions for Alessia or Stephen, please share with us in the Q&A section, and they will answer them at the end of the speaker presentations. We are now moving to our third speaker for today, Mrs. Eleni Polycarpou, partner, co-head of international arbitration at Withersworldwide. Eleni has long-standing expertise in dealing with international commercial disputes. This includes commercial arbitration as party-appointed counsel under various institutional rules, as well as ad hoc arbitration proceedings. Eleni is fellow of the Chartered Institute of Arbitrators and takes arbitrator appointments. She specializes in international commercial disputes, including heavyweight commercial fraud work, both in English courts and in international arbitration. She acts for high net worth individuals and their companies, often advising on shareholder and joint venture disputes, banking disputes, contract and tort disputes. Eleni is also well versed in mediation and has a track record of achieving a successful settlement of disputes via this method. She has a specialist practice advising on art-related disputes and has recently been chosen by the Court of Arbitration for art to join their panel of arbitrators. Eleni is from Cyprus and speaks fluent Greek, English, and Italian. Eleni's practice has a particular focus in acting for clients from those jurisdictions and from Russia and CIS, who often hold their interests through Cypriot companies. Eleni today will talk about the impact of Brexit on the enforcement of judgments between the Cyprus and the UK. Eleni, you may take on.
Hello, thank you so much for the kind introduction, Xenia. It's my pleasure to join everyone today. Just on a personal note, I grew up in Cyprus and I moved over here to come to university. So I really enjoy working with clients with interests in Cyprus. So before I talk about enforcement of judgments, I just want to talk about more generally about the courts. So because there's lots of debate about this because of Brexit, but all of the reasons why parties to commercial agreements have traditionally chosen English law and English jurisdiction to resolve their disputes still apply. So the quality of the courts and the judges in the UK is second to none. Judges go quickly to decide cases, and they're not afraid to hold final hearings or summary hearings, which I know to be the case in Cyprus quite a lot. They're particularly good at dealing with fraud disputes, and they find ways to punish fraudsters. So including people who sometimes are quite influential in their own countries and have avoided kind of being punished there. So they come here and the English court will deal with it impartially and fairly and efficiently. An example of what I'm talking about in relation to the courts is that throughout the pandemic, the English courts have coped exceptionally well. We literally moved seamlessly from in-person hearings to virtual hearings on the 23rd of March 2020, which was the first day of lockdown. And there's been no delays, or practically no delays, and it really has been kind of business as usual. I know that that's not the case in other countries, so I just wanted to mention that. So just onto my main topic now, which is enforcement of judgments from Cyprus to the UK in our kind of post-Brexit environment. So first thing to say is that any judgments which were issued in Cyprus for cases which were filed in the Cyprus courts before the 1st of January of this year will still attract the Brussels regime, which is automatic recognition and enforcement. For cases which were filed after the 1st of January of 2021, there are three options for enforcement in the UK. The first one is the Hague Convention on Choice of Court Agreements. So the UK acceded to this convention on the 31st of December 2020 in its own right. Other members are the EU, Mexico, Montenegro, and Singapore. So this applies where there was an international commercial contract with an exclusive choice of court agreement in it. It covers only civil or commercial matters and will not, for example, apply to matters such as intellectual property, wills, family law disputes, consumer law, employment law. But it does cover the kind of commercial disputes that I was talking about earlier. It doesn't cover interim orders. It doesn't cover contracts which were entered into before the 1st of October 2015, which is when the EU acceded to it. And also, if there is a non-exclusive or asymmetric or optional jurisdiction clause in the contract, it also doesn't apply then. The second way of enforcing judgments from the UK from Cyprus to the UK now is through the Administration of Justice Act 1920, which was legislation which applied when Cyprus became independent. And I think it's likely that the UK will revive this piece of legislation to enable reciprocal enforcement of judgments. I believe Cyprus is doing the same with the same kind of piece of legislation. The way to do that is through a registration process. So you need a certificate, a copy of your Cyprus judgment in Greek and a translation in English. You apply for what we call is a registration order. And once you get that order, you serve it on the debtor and you wait for the time to expire when he's allowed to challenge it. Once that time is expired, that registration order is treated by the English courts as if it was a judgment of that court, and you can proceed to enforcement quickly. Now, for people who have known assets in the UK, such as property or bank accounts or anything like that, enforcement in the UK can proceed very quickly and efficiently. So the registration process is a bit slower than what the previous Brussels regime was, which was automatic recognition and enforcement. And also it allows challenge in ways that were not allowed before. So some grounds for challenge are that the judgment was manifestly contrary to public policy. There was lack of due process in the originating court, such as lack of notice to the debtor, inconsistent or irreconcilable judgment, or judgment obtained by fraud. So it is slower. It does allow a bit more leeway for challenge, but once you get there, then you are in the same position as you were before. There is another convention called the Lugano Convention, which UK applied to accede to it, but has not acceded yet. And the scope of that is much wider because it allows interim orders as well, which is what we had previously under the Brussels regime. So we can talk about that in another webinar once we have an update. So at the moment, that doesn't apply. But the important thing to emphasize is that once you've gone through the registration process, you are in the same position as you were before. Any other alternatives other than exclusive jurisdiction clauses? Well, yes, it would be no surprise to you for me to say that you should use commercial parties that have interests outside of Cyprus, or even commercial parties in Cyprus should use arbitration clauses by way of resolution of their disputes. There are many, many reasons for this. I'm going to just focus on three of them. One is enforceability. So arbitration is entirely outside of the Brussels regime, always has been, but it does have something called the New York Convention of 1957, which requires courts to automatically recognize and enforce arbitration awards with very little challenge. Flexibility, so you can adjust the process of the resolution of the dispute depending on what it is, the value of it, and you can get to a result very quickly. You're not tied to a court procedure or to a judge who will not appear or adjourn or whatever. Confidentiality, so no public hearings, documents are kept confidential. And efficiency in time and costs. If you choose the right arbitrator, then you can get to a result very, very quickly. And so to conclude, my advice in this day and age of post-Brexit world in relation to commercial contracts is use exclusive jurisdiction clauses or use arbitration clauses, simple ones, not ones which try to carve out different kinds of things, but ones that are all-encompassing and include everything. And that way you're avoiding unnecessary jurisdictional battles. So that's all I was going to say.
Okay, thank you so much, Eleni, for your presentation, and indeed very interesting views. And if our audience would like to if you have a question for Eleni, please send us in the chat and she will answer us at the end of the speaker presentation. We are now moving to our next speaker, who is from Cyprus this time, Maria Georgiou, Chief Financial Officer at Michael Kyprianou Accounting Services Limited. Maria is the Chief Financial Officer of Michael Kyprianou Accounting Services and Associate of Michael Kyprianou. She has extensive experience in the financial reporting for Cyprus companies across a wide range of industries, as well as considerable experience in personal and corporate Cyprus taxation, consulting various clients on Cyprus tax matters. She has over 10 years experience in the accounting profession, working for 10 years in Big Four companies in Cyprus. Maria obtained her bachelor from University of Cyprus, and she's a fellow member of the Association of Chartered and Certified Accountants, as well as a member of the Institute of Certified Public Accountants of Cyprus. Maria will explain today the tax benefits of UK companies relocating in Cyprus. Maria, we are ready for your presentation. You can unmute yourself and you can start your presentation.
Thank you for the introduction. Good afternoon from me. So let's speak from Cyprus tax side. So it is fact that many foreign companies are moving and relocating in Cyprus. The main reason for these moves is the attractive taxation system that Cyprus has. So let's take the things one by one and let's stress on the tax benefits that such moves have for companies and for investors. The Cyprus taxation system is very simple and transparent and progressive. It's harmonized with European standard and follows all the OECD practices. So when a company is taxed in Cyprus, a company is taxed in Cyprus when it is considered Cyprus tax resident, meaning that its management and control is exercised in Cyprus. It is where the majority of the board of directors and the decisions are taken. All Cyprus tax resident companies are taxed on their income that is earned or accrued from all its sources, either in Cyprus or abroad. Also, non-Cyprus tax residents can be taxed in Cyprus if there is permanent establishment in Cyprus, and this income is earned from the business activities that are carried out in the island. The tax rate in Cyprus is very low, at 12.5%, and it is considered one of the lowest in Europe. Also, there are cases where a much lower effective tax rate can achieve, for which we'll speak during the presentation. There are many incomes that are totally exempt from the corporate taxation, like the dividends income, profits from the sale of securities, passive interest income, and profits of foreign permanent establishments. Cyprus has a very broad double tax treaty network with more than 60 countries worldwide. This has many benefits, of course, like the receipt of dividends, interest, or royalties from abroad, either at very low or at zero withholding taxation. Also, companies can claim tax relief credits in Cyprus for any taxes that are paid abroad on the foreign income, provided, of course, that the income is taxed in Cyprus. Moreover, the capital gains tax in Cyprus is at the rate of 20%, and it's only applicable on the cases where there is a disposal of real estate in Cyprus or a disposal of shares in a company which holds real estate. Other tax highlights is the fact that in Cyprus there is no inheritance tax, there is no immovable property tax, and there are not any taxes on entry, reorganizations, and exit for companies. Also, there is a group relief provision in which companies belonging to the same group have the option to transfer tax losses of a loss-making company to a profitable company of the same group. This has an efficient an effective tax rate for the whole group, but much lower. Furthermore, another scheme that is followed in Cyprus is the notional interest deduction, where tax resident companies or Cyprus permanent establishments which receive new equity funding have the option to deduct up to an 80% of their income that is produced from new equity funding. Notional interest deduction is equal to the multiple of the reference rate of a 10-year government bond of the country which the funds are employed, plus a premium of 5%. Furthermore, Cyprus branches can be opened from head offices of UK. Branch profits are treated like permanent establishments, so the branch profits are taxed at 12%. There are no more taxes on the transfer of profits or funds to the foreign head office, and of course, this as a whole is beneficial for the head office. Another scheme that developed in Cyprus, especially after the COVID period, we notice that there is a trend of developing new products, new intangible products like the applications, softwares, and generally technologies. Of course, this trend has many benefits in Cyprus. There's the development of the intellectual property box scheme, the IP box scheme, where 80% can be deducted from the profits of an IP. This has as effect a corporate tax rate up to 2.5% that is earned from the relevant intellectual properties, which is one major advantage in our days with the need of the technologies and the applications and the softwares that are developed day by day. Furthermore, let me mention some benefits for the individuals that are coming in Cyprus and becoming Cyprus tax residents. First of all, personal tax income taxation follows a scale basis, meaning that the first 19,500 are totally tax-free, and following on a scale basis progressively at 20, 25, 13, 35%. 35% is only applicable on cases where the income is over 60,000 euros. Also, as the corporate taxation, there are incomes that are exempt from personal taxation, like the dividend income, interest, 20% of the rental income, and the profit on the sale of securities. In Cyprus, there is the option for people that receiving pension from abroad for this to be taxed at a flat rate of 5% for the amount that exceeds the 3,420. Or if they want, this can be taxed normally under the personal income taxation. It depends on the amount of the pension of the person. Furthermore, people in Cyprus can enjoy a general healthcare system that is applicable for all people residing in the island, in Cyprus. Lastly, let me mention a special scheme for people that come in Cyprus and become Cyprus tax resident is the non-domicile scheme. Non-domicile scheme give the option to people to be exempt for special defense contribution for 17 years, meaning that they will not pay any special defense taxation on their income arising from dividends, interest, or rental income. An example, just a small example for better understanding, is that let's say that a UK resident comes in Cyprus and become a Cyprus tax resident with non-domicile status, and his sole income comprised of dividends. This person will pay no personal income tax and no special defense contribution. So this is a major tax advantage for people coming inside. Closing, I believe that Cyprus is one jurisdiction that developed a very attractive tax system. The combination of factors such as the tax legislation, the straightforward corporate system, and the tax policies that are developed in Cyprus make Cyprus into an ideal location, I can say, for running businesses and making the country more significant international financial center. And if I personally have to reply to today's webinar question, is Cyprus an alternative destination for Londoners? My answer is yes. I believe that Cyprus is an alternative destination, and we notice every day that there are many people, especially from the United Kingdom, that are moving in Cyprus, starting new businesses, formatting Cyprus companies, or coming to reside with their families in order to optimize their tax status, which is a major advantage for many people. So it is an attractive financial center, yes, and a business solution for many companies. That's all from me. If you have any questions, I will be happy to reply at the end of the webinar. Also, my email address is indicated on the presentation, so feel free to send me an email and I can reply to you. Thank you for your attention.
Thank you so much, Maria, for your presentation. And indeed, as the topic of our webinar today is whether Cyprus is an alternative destination for UK businesses, and as the implications and the impact of Brexit are now becoming apparent, many businesses in the UK are considering establishing a base to other European companies. And for this reason, I have chosen today to talk about Cyprus companies, which will be the final presentation for today. Before I start the presentation, allow me to say a few words about myself. I have been introduced already. My name is Xenia Neophytou. I'm a chartered certified accountant and holder of the CISEC Advanced in Financial Markets, a certified trainer of vocational training and certified mediator for financial differences. And I'm a frequent speaker at conferences speaking about Cyprus, finance and investment opportunities. I'm also an active member of the financial services community, participating in technical committees for funds of the Cyprus Investment Fund Association and IPAC, and also I'm a board member of the Cyprus India Business Association. In 2016, I founded my own company, CX Financia, which is a boutique finance and administrative service provider here in Cyprus. Here in CX Financia, we work closely with corporations, investors, and high net worth individuals, helping them with their international businesses via Cyprus. I'm very excited to be here with you today and looking forward to your interaction that will follow at the end of my presentation. Allow me for a minute to share my screen. As mentioned, UK companies, should they wish to continue business operations through the EU moving forward, are inevitably questioning the location of their business post-Brexit, some of them firmly committed to moving to continental Europe. So the next question for these companies is where exactly can they easily incorporate? The framework for facilitating the establishment of foreign companies in Cyprus makes it an attractive post-Brexit solution. So in my presentation, I will explain the key benefits for forming Cyprus companies, their main characteristics, and common uses for business structures in Cyprus, and outline the formation process. The benefits of doing business in Cyprus are many. It has one of the most friendly and cost-effective environments in the European Union. Maria has explained in detail in her presentation before the tax system in Cyprus, which offers numerous exemptions, a global network of double tax treaties, low corporate tax rate, and one of the lowest in EU. Coupled with the tax, we have a robust legal framework which is regularly updated and modernized with first-class professional services. And Cyprus is offering to investors an ideal place to conduct business and achieve a good balance of personal and professional life. Another recent change that has been made in Cyprus is among other schemes, is the fast-track business activation scheme, which targets foreign non-EU nationals. As you can see in this slide, there are different types of business entities in Cyprus. Starting with Cyprus companies, these can be of three different types. Companies limited by shares, where the liability of shareholders is limited to their shares. Companies limited by guarantee, where the liability of the members is agreed and members guarantee the amount they will be liable in the event of liquidation. And unlimited companies, where the liability of the members is unlimited. In Cyprus, the most common type is the private company. Maria also mentioned the branch of overseas companies, which is not a registered company, but any profits made in Cyprus will be taxed with the same corporate tax rate. We also have the European public company, which may be incorporated in any member of the member state of the EU. Someone can also carry a business as a sole proprietor, which can be a physical person. It is important here to highlight that the sole proprietor's profit is subject to income tax and not corporate tax. We also have the partnership structure, and Cyprus has three types of partnerships depending on the level of liability of the partners, and this can be the general partners, the limited partners, and partnerships limited by shares. Finally, Cyprus companies can be listed on the Cyprus Stock Exchange. Listed companies are public companies, and this option provides greater exposure to finance. In this slide, we see a summary of some of the key issues to be considered before setting up a Cyprus company. As mentioned before, a duly incorporated Cyprus company constitutes a separate legal entity, and the most typical form is the limited liability company. A company name must be chosen and approved by the registrar of companies. This procedure usually takes 3 working days. To register the company, the memorandum and articles of association must be prepared, which includes the objects and powers of the company. The number of shareholders in a private limited company may be from 1 to 50 and have a minimum authorized share capital of 1,000. The law also requires that the company has at least one director, and it is worth mentioning here the residency status of the directors or the companies is considered key, because if they have a local director, then the company will be considered tax resident. Also, a Cyprus company is required to have a secretary who may be a natural or legal person. The secretary acts under the instructions of directors, maintains the statutory rights, and performs certain administrative functions. And finally, a company is required to have a registered office and address in Cyprus. It is also important to highlight here that all Cyprus companies are obliged to register with the Inland Revenue Department and file with the authorities audited financial statements by local authorized auditor. So what are the uses of Cyprus companies? As we see in this slide, there are limitless options for structuring a Cyprus company, including as a holding or subsidiary company in a group structure or group for financing purposes. It can also be as a holding of various rights, including intellectual property rights, ship management and ship owning companies. We have also the licensed entities, the Cyprus investment firms, alternative investment funds, electronic money institutions, which this may require additional licensing and registration requirements. Here I would like to mention our office is specialized in licensing solutions and has successfully obtained for our clients licenses for investment firms, fund managers, and EMI entities regulated by SISEC and Central Bank. Now, after understanding how to structure a Cyprus company, it is necessary to know how to register. The process is quite simple and can be completed approximately between 5 and 7 days. You will need first to register the name of the company and receive approval from the registrar. And then you will need to deliver the company information package to the registrar, which includes the memorandum and articles of association and other application forms and statements appointing the secretary, the director, and the registered office address. The submission of the application can be done with the traditional method, hard copies, or the e-filing method. After registration, the owner will receive the incorporation certificates and also can request other certificates, including shareholders, directors, secretary, registered office, as well as copy of the articles of association. So at Six Financia, we are an authorized service provider, and we guide and assist local and international clients in all steps of the incorporation process for new companies or the formations of complex structures. We offer director, secretarial, and registered office solutions and can provide our clients turnkey solutions for establishing substance in Cyprus, which are cost-effective and tailor-made to their specific requirements. If you want to know more about our services, feel free to log in our website or to follow us on LinkedIn. If you need more information on Cyprus companies, feel free to give us a call or send me an email or contact me directly and we'll be happy to answer any questions. Thank you very much. This is the end of all presentations. I will now open the floor for the Q&A section. We already have some questions that came in, and we are ready to start. Our speakers, can you all unmute yourselves and we can participate in the Q&A? Okay, I have a first question which relates back to our title. And I will ask Stephen, since he was the first, is London going to be the place to do business in the future?
Short answer is very definitely yes. The longer answer is, of course, people will be familiar with a non-domicile tax regime for individuals, which gives you very preferential treatment for up to 15 years for all of our taxes. And basically you only pay tax on income and gains you earn in the UK, offshore income's ignored. But also, if you look at a corporate tax regime and compare it to all the other usual corporate tax regimes in Europe and in our time zone, the UK is probably the best place to put it, because we have no tax on dividends coming in, no tax on dividends going out, And if you're a trading group, no capital gains tax on sale of subsidiaries either. So whilst we don't have a participation privilege, we sort of do have a participation privilege, the same as everybody else, except it's a big secret, so I'd be grateful if everybody didn't tell anybody else about it. If you look at London as a financial sector, even post-Brexit, it's still 20 times larger than the rest of the EU's financial sector put together. That's not going to change in the lifetime of anybody here, mainly because we have another secret weapon, which is the English language. It's as plain and simple as that. Everybody anybody wants to do a job internationally speaks English, which means they can readily come and work here. To give you an example, Gibraltar opened a hotel a few years back, and they had something like 8,500 job applicants for 500 jobs. Why? They speak English. It's as simple as that. So London's not going away for a long, long time. It's going to be a good place to do business. My particular interest with the GB Cyprus Business Association is that looking at EU member states, for me, Cyprus has a lot going for it. You can get a tax ruling. You've got a great tax regime, very sensible tax regime. And for me, I have a lot of clients based in UK and Israel, and Cyprus is literally just a hop, skip and a jump from Tel Aviv. So for me, it's got loads of potential, particularly using finance companies in Cyprus. So I'm a big fan of Cyprus.
Indeed, there are many links with Cyprus and UK, and I believe as well there will be a lot of interaction way forward. And yes, I believe also as well London is a business center, and yes. Anyone, maybe any others from our speaker would like to comment on the first question about if it's going to be the place of business for the future? If you have any other comments on this?
I think I agree. I agree with Stephen in terms of the business and the individuals behind the business. It's here to stay. There might be a different composition to an extent of the individuals that are coming in terms of where they're coming from, at least at the beginning, in the kind of immediately post-Brexit, the kind of limitless flux of people, individuals coming from Europe has not stopped by any shape or form, but is maybe quieter, and that's not helped by the pandemic. But definitely London in particular, the UK in general, it's a place where it is possible to do business in a sensible and fast way, is the avant-garde for many businesses, and the individuals can fit themselves in as well in terms of the raison d'homme regimes there. So
yes, I think it's an interesting period we are gonna in the future. Yes, but indeed, UK will have a different approach, but also it's good to do the planning for working and remaining with European companies. That's also the idea. And as Stefan said, there are a lot of interactions and opportunities. Okay, I have a next question now from the audience. I think this might be for you, Alessia. The question is UK clearly still a very good option for relocation? In your experience, are international mobile clients looking at other jurisdictions too? If you want to answer, Alessia.
Yeah, I mean, as I said, I kind of waved the flag for the UK for sure. I think there are definitely, I mean, in my experience, there are clients are always asking where next, especially, I would say, especially clients who are here or have already been here and are looking to the next place to go to. Because as I said, the UK is still attractive if you're kind of the first time comer as opposed to having been here already. And there are other jurisdictions. certainly the jurisdiction who help in other areas than just tax are the ones that are favored. So the European jurisdictions for non-European clients are always seen with an advantage point because of the ability that then you have to move internally within the European zone and the Schengen zone once you have your permanent residence in a European country. So Cyprus is always mentioned in that, and the ability to have an entry point that is easy to define, be it a visa, an investor visa, property visa, or similar. Spain, Portugal, again, remaining in Europe and not going to the Far East, things like Singapore or Hong Kong. So Spain and Portugal have similar but different but attractive regimes, say. Italy has one now, one since the 2017. And again, people are looking at Italy as a place to go. And I think a lot of these other jurisdictions that I mentioned, one of the advantages is that you don't have necessarily to review completely your assets structure, where you have your wealth and how your businesses are managed. You may use the relocation as an opportunity to review, but if you do not want to review, you can still have, for example, your companies or your holding companies in other jurisdictions. And Cyprus is certainly a jurisdiction that comes up very, very often. Is a European country, so you have the benefit of kind of the European umbrella rules. Similarly, for individuals who have businesses over here, you can keep on having those and simply physically relocate yourself. So there are opportunities out there, and I think whenever we discuss relocation, in my mind, it's never A to B. There's always other jurisdictions involved that can be taken into account.
Indeed, and as you mentioned in your presentation before, you need to plan well ahead. I think so. Yes. Yeah. Okay, so I think I have another question now. The next question from the audience is for Eleni. The question goes: is there a limit within which you should make your application for enforcement in the UK?
And so the application for enforcement of the Cyprus judgment, as I said, is likely to go under either Hague Convention or 1920 Act. The Hague Convention doesn't have a limit. The 1920 Act has a limit of 12 months, but it's discretionary. And so the court can exercise its own judgment to order it to be registered if in all the circumstances of the case they think it's just and convenient that the judgment should be enforced in the UK. There was a decision came out quite recently on this, on a Malaysian judgment that was enforced under the 1920 Act, and that one was there was a 10-year delay between when it came out and they tried to bring it here, and the court said yes, you can proceed to enforce using its discretion. So there is a time limit, but if you have reasons not to, that you're outside it, the court will listen.
And have you seen a change in the number of international cases going through the English courts following Brexit, Eleni?
Well, as I said earlier, one thing that's happened, it's a bit skewed because of the pandemic, I think, because one thing that has happened in the UK is that, as I said earlier, the courts have continued with business as usual and continued with hearings virtually. And I think a lot of people who maybe would not have come here to have their cases heard have now done so because of taking advantage of that. In my experience, businesses want to have disputes resolved quickly, and they don't want to get stuck, and they want to just crack on with their businesses and get new businesses and do more interesting things than getting stuck on disputes. And I think the English courts are very adept at doing that. I think in terms of impact of Brexit, I am aware that, for example, Netherlands and Paris have set up commercial courts to try and compete with the London Commercial Court, and they hear cases in English, which, as Stephen said, is a key factor in business. And I think it's going to take a long time to see if that has any impact. At the moment, the Commercial Court in London hears cases, 50 times the number of either of those two courts, but they are brand new, and Brexit is new, and so it's a watching brief. Hopefully we'll all stay as it is.
Indeed. Let's see. Okay, so I have a couple of questions now relating to Cyprus tax. So Maria here may help us. The question, it's about the person receiving pension from abroad can choose for this to be taxed at 5% flat rate. How do a person can choose from which band to follow, flat or normal band? And can he change his mind from one year to another? Maria, can you help us? This is on the tax.
Okay, so it depends on the amount of foreign pension. So if the foreign pension income received in Cyprus is less than 90,500, of course it will be chosen to follow the personal income tax rate, since the person will not pay taxation, personal taxation. If the amount of foreign pension is, let's say, 100,000, he will choose to be taxed at the flat rate of 5%, in order for the tax amount to be lower. And the person can change his mind from the one year to the other. It's not something that it's obligatory to be followed every year.
Mm-hmm. Okay, and there's another one for the taxes from Cyprus regarding the intellectual property. You mentioned in your presentation that a company developing intellectual property may achieve a tax rate close to 2.5% instead of 12.5%. What are the criteria that a company can be eligible? That's the question from the audience.
First of all, we confirm that the taxpayer is a qualified taxpayer, meaning that either he's a Cyprus tax resident or a Cyprus company tax resident or a permanent establishment. Afterwards, there is a list as per the relevant law that certain intellectual properties are approved under this scheme. For example, software applications and patents. There are many items that are excluded, for example, trademarks and marketing tools. What we do for our clients is to prepare a case for the tax authorities and present the characteristics of the intellectual property and the status of the research and development. And we ask for a tax ruling, a tax confirmation from tax authorities confirming that this company is eligible to follow the IP box scheme. Once we have the written confirmation from the tax authorities, then we just make the relevant calculations, and the company is taxed at the relevant low IP box tax rate, which is close to 2.5%.
Okay, thank you so much, Maria. So I have a next question, and I think I will ask this one to Stefan, and then the rest of the speakers can comment. What are the opportunities in the UK for a Cypriot business or investor, do you think, Stefan? You have to unmute yourself, though.
Apart from the usual opportunities, I think the the new free ports are going to be quite a major opportunity for a number of reasons. The bedding down of Brexit and free movement of goods and other items is taking some time because people need to look at the guidance and get their businesses in order. And I think the free ports are going to help significantly with that, because the nature of a free port is it's not within anyone's VAT or customs zone. So goods can easily move in and not pay any tax or customs duty from anywhere in the world. Can be particularly relevant for Ireland, clearly relevant for Europe. And in addition, the tax advantages, the direct tax advantages that come with that will mean that this will be a very tax efficient investment from a UK perspective in UK commercial real estate. And the areas of Britain we're talking about tend to be fairly low cost areas anyway. So they're going to be good because there's going to be a lot of labour available in those areas. And the investments are going to be tax-free from a UK perspective, which would make them attractive to investors worldwide. In the context of Cyprus, I would say, you could imagine a Cypriot fund investing directly into one of these properties, probably on a pre-let basis to an occupier, and then being able to sell that around as an investment in UK real estate, an investment in sterling, and one that they can get out of the UK without paying any tax on it. So a good pension replacement, knowing what's happened to your bank accounts.
Okay, that's very interesting. Any of the other speakers would like to comment on this question?
Just speaking from my experience on art transactions and the buying and selling of art by collectors and auction houses, and London is a really big centre for art. I do think I agree with Stephen that the new Freeport will provide a kind of an interesting kind of side aspect of this, because at the moment most collectors that I know and auction houses use free ports. The ones established in Geneva and Luxembourg in particular are very busy with artworks from the UK. So whether all those get moved to free ports in the UK to take advantage of the new regime will be interesting to see. But I do think that London is and will continue to be a major centre for buying and selling of art.
Yeah, that's because that's where the money is. And also, there's an issue I'm aware of that something like over 25% of the world's modern art is in the Geneva Freeport. Now, from an insurance perspective, that's a bit of a high risk, high concentration risk. And the fees aren't very cheap in Geneva either.
No, although at the moment you can register, you can put works of art in the Geneva Freeport using names of companies and not always the name of the ultimate beneficial owner. The Luxembourg one, you have to put the name of the ultimate beneficial owner on. So I don't know what the plan is for London yet, but that will be interesting to see as well.
We won't be a free port in London, but there will be everywhere else.
Yeah, in the UK.
Yeah.
Okay, that's very interesting. And also for intellectual property, I think some more actions need to be taken now, and some complications may arise. And I think using a European base can also be an alternative. And I think, as we mentioned also in the presentations before, and you mentioned that having an alternative solution to a European base can be the answer. Yes. So anyone else would like to comment about the rest of the speakers, or I think I have another question on tax, if anyone does not want to comment on the previous question. And so the question that is for tax is, if my Cyprus company paid taxation in the UK, can this be claimed back in Cyprus? So I think most probably it's a question for Maria.
Yes, and any tax credits that are any tax payments made abroad can be claimed back when the tax return of the company is made. This is done in many tax jurisdictions. So what the person has to do is just to keep in place the relevant payments made, because tax authorities ask for proof of the relevant payments that make abroad, and generally it reduces the tax liability in Cyprus if the relevant tax is paid in UK. That's all.
Okay, yeah, thank you, Maria. I think I also have another question. Let me just check. For Eleni, I think this is the one. What kind of arbitration would you recommend that parties use?
So just very quickly, there are two ways you can use arbitration in your commercial contracts. One is ad hoc arbitration, and the other one is institutional arbitration. Institutional arbitration means appointing one of the arbitration institutions, such as the LCIA or the ICC, or the Stockholm one, or the Singapore one, or there are so many now, to administer your arbitration. So they would do things like, they have a set of rules that you follow, and they would do things like set the arbitrator's fees and collect them, and so manage all that aspect of things. Ad hoc is when you don't have an institution and you just have a mechanism of appointing your arbitrator, who is essentially your judge, and he would then set the rules or arrange for his fees to be paid, etc. It is much easier to use an institution, especially if you've got a situation where one party doesn't want to participate. But it is a bit more expensive, and depending on the institution, fees vary, and so you should have that checked before choosing one or the other. So it just depends on the value of your contract and what you think might happen to decide which one of those two to use. The key is to appoint a really good arbitrator who will then manage the process efficiently.
Okay, thank you so much, Eleni. And since we are approaching the end of the presentation, the webinar, I would like to ask for our speakers to comment if they can, and I will start with Alessia. If you could give us 3 takeaways for today, what would this be?
I think it's one really big takeaway, and then we can break it down. But from my perspective, just plan in advance, or plan for as much as you can, as in advance as you can, if you are relocating. And then if you want to break it down, is make sure that you understand from both jurisdictions the main concepts. So things like residence and tax residence, number of days. Don't just assume that the same rules that you know domestically carry across to the other jurisdiction, or even the rules that you know internationally. Everybody talks about the majority of the tax year, but often that is way more than you need to establish residency in a specific country, and that would be the case in the UK. The other point is, as I said in my presentation, don't forget about all the things that you have not considered. So be guided by your advisors, not just focus on one aspect that is the main aspect, the reason why you are relocating, but do spend some time thinking about all the rest, because once you are there, it's much more difficult to unravel or rethink or rearrange things. It's much better off than to do it beforehand, or to know the implications if you don't do it. And the third point, I think, is one that as a non-English speaker, native, let's say an English speaker, I'm a native Italian speaker, I often come across, and I think is important for everybody to notice. Yes, English is the common word and the common language for all of us, really, and the business world at large. But it's also sometimes quite dangerous, because certain words have completely different legal meanings in different jurisdictions. So, simple things like domicile mean fundamentally different things in different countries, and they have a specific meaning in the UK, for example, both in tax terms, but also in legal terms. So just kind of a word of warning when things are translated or used, because they don't mean the same thing. So just make sure that you get the proper and full advice from the lawyers or the local advisors to understand exactly what it means, as opposed to just a word that you might misinterpret.
Okay, thank you, Alessia, indeed, and for your takeaways. So anyone else of our speakers would like to say their final, their key takeaways before the final word? Stefan?
Yeah, I would basically build on what Alessia said, because language and communication is paramount. For example, I'm a native-born English speaker, but I have no idea of how American works, because it seems to be a completely different language to the one I speak. And they use terms, they talk about stock where we talk about shares. It's the same the world over. If you could speak more languages, though, particularly if you're trying to sell to a country, if you could speak their language, that helps tremendously. And also going back to Alessia's slide, and it's kind of like the first value on my wall here. Tax is not the most important thing in life. I have a lot of people who think it is, and a lot of clients who think it is. And some of them probably ought to be committed to a mental hospital for their own well-being, but it's not the most important thing in life. Being happy, family, relationships, they're far more important. At the end of the day, it's just money, and you can't take it with you. The third thing I'd say then, language, tax is not that important, is the common ties. Everybody goes on about Brexit, but if you look at history, Cyprus was famous for being the source of copper, the major source of copper, and that's where Cyprus's wealth came from if we go back a couple of thousand years. The Bronze Age effectively ended around 12,000 BC, and that is because known as the Sea People came in from Western Europe and started raiding the whole area around Cyprus and all the Levantine coast, and it got down as far as Egypt. And why did that bring an end to the Bronze Age? Because the main source of tin, which you mix with copper to make bronze, was from Cornwall in England. So up till 1200 BC, Cornwall and Cyprus were together the main producers of the key ingredients for bronze. And once the Sea People started intervening in the trade route, that brought an end to the Bronze Age, because you couldn't get any tin. I'm told there's a small deposit in France, a small deposit in Italy, and the next major deposit is in Afghanistan, which is far too far away. So things will carry on. They've been going like this for the last 1,500 years. They'll go on for another 1,500 years. And we just ignore the politicians and get on with it.
Indeed. Okay, thank you. Very, very interesting views. So, Eleni, would you like to tell us your key takeaways for today's webinar?
Well, that was indeed very interesting, Stephen, and it shows how close we all are, and that's a good message. But I did like Alessia's motto, plan in advance. And so if you're thinking about doing anything, plan in advance, take advice. If you're going to enforce your judgments, get some advice. You can still come to London and do all the things that you could always do. And so, and I would recommend people taking advice on using arbitration as much as they possibly can. Thanks.
Thank you. Maria, as well, you like to mention, of course, you mentioned a lot of the advantages, and also my key takeaway is that, yes, with the Brexit, it's going to be an interesting period, but definitely Cyprus is here. We have a lot of common links with the UK, and it can be used as a base for UK companies and UK people to do business in Cyprus. And if they don't already know the advantages, they should look into them. And there are many, as Maria mentioned, and I have mentioned, not only the common ties and the tax system, but also many other opportunities. And it's good, it's worth looking into them. So Maria, your final comments for today?
Of course, I agree with all the other people. In my opinion, planning, of course, is a major step when we are planning to move, especially asking advice from both UK and Cyprus in order to see the views both from UK perspective and from Cyprus perspective, not only the one side, because of course in our profession, in the treatment of many clients, we ask the other jurisdiction in order to be sure that optimizing status in Cyprus will not have any bad effects in UK, let's say, for the person or for the company. So asking advice from both sides, and planning is the major step, I believe, for any relocation and then every move.
Okay, thank you, Maria. Mr. Savvas, Kyriakides, would you like to say a few words before we end today's webinar?
Yeah, I would like to thank all the speakers. Actually, I had one question that came to me from the audience, and first is two questions actually. First, for the two solicitors there, for the Withersworldwide team, there was a trend of many businessmen coming to London to open their own business in the last decade, especially from the Europeans. It was an easy access. This trend, I believe, is gonna carry on. A lot of businessmen, they're gonna come to London and open their own business. Is it gonna be easy for them to do it, or there are gonna be some barriers, or London will be selective on this demand? This is the first question for Alessia and Eleni. And the second question is for Stephen and Maria. If you during the COVID period of these 15 months, the two governments have spent a lot of money to keep the businesses alive and help them to recover and start bouncing back. Do you believe that now or 6 months later they will come and raise the taxes for the businesses to repay this this support? Let's start with the first question with Alessia and Eleni.
Shall I go, Eleni?
Sure, you go and I'll supplement.
I think, I mean, the answer, in a sense, we've answered with the previous questions, but I think there's the short and the long term. The short term is not in principle, maybe yes in practice. You know, there are going to be changes that all the businesses and the business people need to be taken into account. Things are different. We are in a post-Brexit situation. We are in a post-pandemic situation, hopefully post-pandemic. And so there are going to be changes that need to be taken into account. And if that means slowing down 6 months your venture, well, so be it. In the long term, I think the answer is kind of from the business world and from the continue coming to the UK world, is got to be no. Time will tell, obviously, because we are not future tellers, but I think that that's the right answer. Obviously, navigate this period, hold on tight, and then carry on as normal in the new normal.
I agree. I mean, the question was, will London be selective in allowing businesses in? I just don't think, I think London is a global financial center and it's the center for trade. And so it will not be selective, but as Alessia says, you have to adapt to the new normal, as we call it, and the new rules, and plan in advance, and then come to London as you would have done before.
I can add to that. Prior to Brexit, there were a lot of European financial services businesses that had registered branches and associate offices in London. Now, one of the great things about Brexit is that the UK can do what it wants. And it adopted a very pragmatic approach that if a European Union bank or financial institution was okay on the 31st of December 2020, it would be okay in January 2021. So what they did very early in the process was say to all financial service businesses in the European Union, if you've already got a base here or a branch here, we will fast track your full membership of the UK Financial Conduct Authority straight through. So, you know, they were good enough before and they just processed all through. I think the UK can do that. And we're not, the UK government and the UK are not into building barriers to stop people coming here. In fact, it's the exact opposite. When you look at the European Union, that is a protectionist regime. The UK are going very much the other way. So if you want to move your business to here or want to do some of your business in the UK, I don't foresee that as a major problem because it's totally contrary to what we were trying to achieve. To go on to the question we were asked about COVID, I don't see business taxes going up dramatically to recover the cost. The UK tax system, together with many other tax systems, needs a radical overhaul. And it has needed that for the last 10 to 15 years. And what COVID has done is shown the weaknesses in our tax system. We are over-dependent on bricks and mortar type businesses. We are over-dependent on hospitality, consumerism, all of those things. We need to get collectively, not just a UK issue, an EU issue and a US issue, we need to collectively make sure that those selling intangibles, primarily, of course, people like Amazon, Google, etc., pay more towards the contribution of the economies that they're selling into, because at the moment they're just not doing that job. So I see the people who are going to end up paying are going to be the large multinationals who sell into everybody's country. It's not going to be the local businesses. And I would expect the local businesses to actually have their taxes reduced. So for example, if you occupy a business space in London, you'll pay a rent and your tax on your property, business tax on your property, will be 50% of that rent. And that's killing a lot of businesses. I suspect those taxes will go and disappear, and we will need to get our revenues from the likes of Facebook, Google, etc. So no, I don't see the business taxes going up.
Okay. The second part, Savvas, can you remind us the question?
it was about the already Stephen has answered about the UK. Maria can tell us if she expects the tax rises in the next 6 or 12 months as part of repayment of the expenditure of the government during COVID. We have only 3 minutes to finalize everything. So,
okay, I will be quick. Cyprus government spent millions assisting the companies during the COVID period. However, I don't think that this will give rise to any tax rates increase in Cyprus. There are not any clues that there will be increase in the taxation, either the corporate or the personal taxation, despite the fact that a substantial amount has been invested, has been given to the companies by the government. So I don't think that tax rates will increase, in my opinion.
okay, thank you very much.
Yes, it will be good. Yes, hopefully the economy will recover soon, and the government doesn't have to impose taxes. Yes, and we are optimistic for the future post-pandemic. Yes. So this is the final question, and since we have come to the end of time, I will conclude here the webinar. I would like to thank all the speakers for being here with us and sharing their views for Brexit and all the other matters. A big thank you to our attendees for being here with us. I have enjoyed a lot this webinar with all the insightful information, and looking forward to see you soon in the next webinar to be organized by the association. From me, wishing you a lovely summer ahead, and goodbye to all of you. Yes.
Just to complete you that the recorded video of the webinar will be uploaded in on our website within the next 3-4 days. So you will all get an email when we are ready to have it uploaded. Okay.
Sure.
Thank you very much.
Thank you very much to all, and have a nice summer ahead. Bye.
Thank you.
Thank you. Thank you.
Bye. Bye, everyone.